India's startup sector is one of the shining examples of the Indian economy. Over the past 2 years, or let's just take 2021, there were 44 unicorns. Unicorn is a company with a valuation of $1 billion or more that was produced by the Indian startup system, whose combined valuation was about $92 billion. Going forward, 2022 is supposed to be even more optimistic with more hopes for the startup ecosystem. In fact, this ecosystem has done what many larger companies were not able to do by finding gaps, by finding holes in the existing supply chains, in the existing markets, and made their presence felt, particularly during the COVID slowdown and the resultant economic slowdown. To discuss this, we have with us Padmaja Ruparel, who is a co-founder at the India Angel Network. She comes from Delhi. Mr. Harshil Mathur, who is the CEO and co-founder at Razorpay, again from New Delhi. And Sasidhar Nandigam, who is the CEO and co-founder of CredR. He joins us from Bengaluru. I'm going to begin with Harshil. Harshil, what are the opportunities that you saw? Generally, we saw a contraction of the economy. The economy came to a standstill because of the various impositions by union government as well as state governments. And yet, the startup ecosystem seems to be doing very well. Firstly, tell us what is happening in this ecosystem. And secondly, how did you negotiate this slowdown at Razorpay?
Thank you for inviting me. For us, of course, the COVID-19 pandemic was a mixed bag. On one side, there were sectors that contracted a lot, like travel and hospitality, and a couple of these sectors which contracted a lot. And being a payments company, we see a mix of all segments. We power payments for companies in travel space, to companies in internet space, to companies in digital space. But because we do digital payments, we saw in most sectors, we saw a significant increase in online payments volume. And this is because for example, we power payments in e-commerce space, in food delivery space, in online grocery space, in online gaming space, in online investment space. And all of these segments grew a lot during the pandemic. As people stayed at home, they purchased more things online, they bought more things online. And we power a lot of startups in each of these segments, and a lot of them saw a lot of rapid growth in the last 2 years in particular. So while, yes, there are segments which contracted like hospitality, a lot of segments where startups focus in, where internet businesses focus in, were able to take advantage of the fact that people were staying at home and were buying most of the things online that they typically used to spend in offline world. And we saw a lot of startups in those verticals grew multifold. And because of that, companies like Razorpay grew a lot because we power digital payments for such startups.
Thank you, Harshil. I move to now Sasidhar. Sasidhar, again, the same question. At a time when the economy was slowing down, when there was less money, and you have started this business of CredR in the used bikes, used two-wheeler business. Firstly, what made you start this at such an unusual and such a stressful time, knowing fully well that perhaps the market may be contracting rather than expanding? And secondly, how have you been doing?
Just correct the narrative, we started way back in 2015. So it's not that we started during the pandemic. But having said that, you can say we had a rebirth of sorts during the pandemic because personal mobility and low-cost mobility has taken a front seat during the pandemic. If you recollect the first few months of pandemic where all kind of blockages and all kinds of stuff are happening, people are losing jobs, economy is in all kinds of tatters. People are looking personal mobility to avoid using public transport. And initially, personal mobility was always seen as a luxury, but during a pandemic, it became a necessity. And people were looking at low cost but good quality used two-wheelers as an option to for a high priced new bikes. If you recollect in last couple of years, the prices of new bikes have just gone through the roof. Thanks to insurance, thanks to increase in input costs and BS6 emission norms, all put together created a huge spike in the prices of the new bikes. Now add that to the double whammy of pandemic where people are losing jobs, but still they have to go in search of their livelihood. I think used two-wheelers played a very important and significant role in reviving the economy back to life, because people are getting an option to buy a same two-wheeler which they would have bought at 100 rupees at around 50 to 60 rupees. I think we are very grateful and we are very fortunate that we played a very good role in reviving the economy in at least tier 2 and tier 3 cities. If you see, I think in one ways, lockdowns and opening up of the lockdowns have created such a huge spike in demand for our used two-wheelers that in most of the places we ran out of stocks. And that still continues to be like that, and we believe this spurt in demand is going to be there for a very long time, because people now tasted that there is something like used two-wheeler in the country, and there is a brand which stands for it. I think we have been very fortunate. Hopefully this is not the way for us to revive it, but having said that, no complaints about that.
Thank you, Sasidhar. I come to you, Padmaja. We have here the founders who are doing work at the ground level, setting up businesses, growing them, raising them, fighting the tough chances, or as Sasidhar just said, that this is actually a good opportunity. I want to know from you, how do you, as an angel investor, how do you evaluate these businesses, and what has been the trend so far over the last, not just 1 year, of course we saw a boom, but last 2 or 3 years in the startup ecosystem, particularly the tech-driven ecosystem?
No, thank you. And first of all, thank you for having me on this panel. Appreciate it. I think there is a very good trend that has been happening in the country. Over the last 5 to 7 years, we have seen the startup ecosystem literally grow in leaps and bounds. While we were looking at the pandemic, pre-pandemic has also been very, very interesting. We've seen a number of innovations start to emerge across sectors. And more importantly, these have been coming out from young entrepreneurs who've built literally things which we wouldn't have even imagined. I often say this, that innovation and entrepreneurship is like a virus. It has now got every single sector in the country. I mean, if you look at it from manufacturing, retail, healthcare, every sector, you think of it and there is innovation and startups emerging. It is also emerging from tier 2, tier 3 cities. So today, India has become literally not only the fastest growing startup ecosystem, but it's spread far and wide. With the pandemic, what has happened is the whole ecosystem has really gone on a technology highway, and it's a fast track autobahn. So if I say that any sector you look at, you're seeing startups emerge, and anything tech is what is happening. You know, you look at any sector, it just gets enabled on a technology. For investors, this is like manna from heaven, because angel investors, early stage VC investors, what they look for is innovation which is built towards large market sizes, large growing customer bases, ability to scale, ability to innovate, ability to change behavior, customer behavior. And this is just the opportunity that investors like us, like WION Fund, that's what we look for. If you look at even the two entrepreneurs on this panel, both of them have really focused on a very large market. And, you know, it is Harshal's Razorpay is a need in the market. It's built on the UPI, and there's a need in the market, and it just boomed because of the social distancing and the remote working that all of us were doing. If you look at Cred, it brought into play something that we've never thought of. So I think this is an ideal scenario for India to literally innovate not only for the country, but, you know, actually for startups.
Let me interrupt and just ask you a slightly more technical question. Generally, the rule of thumb is that angel investors or venture funds, they invest in 10 companies and they get a return from 1 which more than offsets the losses from the 9. Has this number changed in your experience over the last 2-3 years? Is the probability of success among Indian tech startups higher than what it used to be in the previous 5 years or 7 years in your experience?
Yes, it has, actually. And I think it's due to two major reasons. One, the quality of entrepreneurs, their ability to build, innovate, execute has just gone up, number one. And number two, there's been a huge market change also. Consumers have started consuming things on the tech platform, as Harshit mentioned a little earlier. So I think both of these have created opportunities where startups are being able to grow, and the success factor has grown. We are seeing that at our own platform. Global players, global VCs, there is suddenly an increase in acquisitions. There's suddenly an increase in next round investments. This is creating a much more successful.
So what would the ratio be today? If it was 1:10 5 years ago, would you say it's about 1:5 today, or 2:5 today in terms of success rates?
Honestly, on our platform, we are seeing a failure rate of not more than 18%. So we are looking at a very, very high success rate, which means that about 22-25% give you really bumper returns. There is about 18% that sort of fails. The balance averages or a little better than average returns is what we are seeing on our platform. Both.
Thank you. So it's almost like a very low-risk business in actually what is strangely supposed to be a very high-risk business. Harshi, let me come to you now. Razorpay in the payments business, it's a very crowded space. And from the large players to smaller players, small players, everybody is getting into this payment. It seems to be squeezing, and yet you seem to be growing, and every other payment company seems to be growing. There could be a consolidation in the next 3 or 4 years. But how do you engage the competition here? Isn't the market over-competitive?
Actually, the market, we started Razorpay 7 years back, and there were more payment companies 7 years back than there are today, right? So, payments is a space in India which is ever evolving. The way I would put it is that, while a lot of companies have come in and a lot of companies have grown, of course, we have seen a lot of scale up. But if you look at from our country's perspective, hardly 5 to 6% of our GDP is still moving through digital channels, right? So there's a lot of opportunity to grow. There's a lot of space to grow. And yes, there are a lot of payment companies that have come in, but payments is a wide gamut of services. There are B2B payment companies, there are B2C payment companies, there are companies focusing on hospitality segment, there are companies focusing on travel as a segment, there are companies focusing on insurance as a segment, and so on and so forth, right? So it's a wide variety of ecosystem in payments, and so it's easy to look at from outside and call it payments, but when you go in and look at it deeply, every company is playing a very different role here, right? And for example, us, we are very strongly focused on B2B as a segment. We enable internet businesses in particular in going online, and we are the largest provider of payments for internet businesses in India, and that is a segment that continues to grow very rapidly, so we are seeing a lot of growth because of that. Similarly, there are other companies who are focusing on other segments of the ecosystem, and they're seeing a lot of growth because of that. But I would still say that we are still less than 5-6% done when it comes to digitization of payments for India. There's a lot of opportunity to grow. So forget consolidation. I believe there'll be a lot more payment companies coming in the next couple of years as well, and each of them will find their own niche and find a way to grow in their own niches as the country goes further towards digitization.
So there is space for all, even in this highly competitive space. Sasidhar, same with you. Your competitor would probably be not so much the tech platforms, but the physical people who actually used to be buying and selling used bikes in various cities at a very city level. How do you compete with them on the tech platform when they have far greater more intimate engagements with their markets or with their consumers? How do you break into this market?
I think a very, very good question. If you recollect how we started the business way back in 2015, I think there's a deep mistrust today in the mindset of the consumers who want to buy second-hand or used two-wheelers in the market, because the market is highly fragmented and very, very unorganized. And there are lakhs and lakhs of second-hand dealers in the market who will ready to tell you anything under the sun, under the garb of a really good sweet talk. I think this sector for a very long time has been neglected, because unlike other segments which are more prone to the Tier 1 cities, used two-wheelers are relegated to either tier 2, tier 3 city or to sectors where people really don't pay attention. So the customers are always cheated of three things: price, quality of the two-wheeler that they are buying. Third is the documentation. You'll be surprised. Close to 60 to 70% of the bikes in India have no proper documentation. That means you really don't know whether the bike belongs to that guy. You really don't know how good, bad, and ugly the bike is. When I bought a bike way back in 20 years back, I bought a second-hand bike because I couldn't afford a new one. And I really remember the transaction happened in less than a minute because that guy sold me a lemon, only to realize after a couple of days that the entire engine had been changed. I couldn't do much. You can't go and argue with them. So to your point, the biggest unique selling proposition for a company like us is that we are building a huge trust factor in the minds of consumers. Like all the consumer internet companies doing the job of building the trust in the name of a brand, we are doing the same thing. I have great respect for Harshil, the way he built the Razor Play. We use them a lot. And I think India is seeing an emergence of a lot of consumer brands, which fundamentally doing the job of transforming an unorganized and fragmented sectors in more organized and branded sectors. That's where entire the consumer trust lies. And we believe we are the first company to do that. And we continue to be focused only on bikes. We'll not get into cars, aeroplanes, or submarines.
Thank you, Sasidhar. Now I'm going to come to my last set of questions. Generally, this is a budget discussion, and generally people say that, you know, the finance minister should do this, the finance minister should give us this benefit, should reduce taxes here, should reduce taxes there. In the case of entrepreneurs, what I have noticed is that you actually go and find the gaps that exist in the economy within the constraints of the economy or the system that exists then. Yet, I would still ask, is there something that you would want the budget to help you with, or some tax changes that would help your business, or are you okay, like you are leading the thing? Let me ask Harshil first.
Yeah, thanks. I think the most important thing that startups seek, and I think is more than tax break, is a break in compliances, right? Like if we can make it easier for startups to scale and grow, reduce the burden of compliances needed in the early days. We all have, and I can see Sasidhar smiling at it, we all have faced a lot of challenges as we are scaling and focusing on our business, and at the same time we have to manage a burden of a lot of compliances, which I understand are needed. But if we can extend those breaks for startups and probably reduce a lot of effort required in the early days, because that time is of a lot of value. The second thing I would say is that on ESOPs, I think there's been a long pending ask from startups to allowing different of tax payments on accessing of ESOPs, which is a big problem because you don't make any money during access, but you have to pay taxes today on unlisted shares. So that is one thing that startups have been asking for. I think the last thing that I'd say from a SME and MSME segment is that we power a lot of internet businesses today, and a lot of them are facing liquidity issues because of COVID-19, because of the pandemic. So if anything that the government can do to increase liquidity, access to liquidity, access to lending for MSMEs, I think that will be really valuable. So those are the three aspects.
Sasidhar, quickly, but anything other than compliances that will
just
make
to keep it very just to keep it very short, government still treats automobiles as a luxury sector, as a sin sector, 28% plus 2%. I think it's time for Honorable Finance Minister to relook at this sector and reduce the GST rates to 18%. I could be greedy and ask for even lesser than that, but 18% I will settle for any given day. And secondly, the most important thing is that keep the GST rates to 5% on the transaction involving used auto, whether it's cars or bikes, because this will bring in a lot more unorganized and fragmented players under the ambit of GST. I think I've been a bit selfish about asking only about auto, because Harshil has very beautifully summarized everything else.
Thank you. Padmaja, last word to you. Anything that your investors would be comforted with, given that you are in a sector that is firstly high risk, secondly it is high return, thirdly it has been doing extremely well over the past 1 year. Do you still want something from the budget?
Yeah, I would just say 2 points here. One, to make exits easy for investors. That's very important, because that liquidity goes back into the startup ecosystem. So Section 281 and Section 78, if they could be looked at, that would be great. The second big point I would say, and I'm not repeating what Harshil or Shashidharan have said, the second big point I would say that startups need funds, and we are the fastest growing ecosystem, startup ecosystem. I think we need to be the fastest growing domestic capital funding ecosystem. So unleash domestic funding from institutions, domestic funding from government bodies like insurance companies, pension funds, and most importantly, create incentives for angel investors and family offices to invest, because this is a high-risk asset class, and these are the people who can really invest and take those risks and not lose sleep. So somehow create an enabling ecosystem to cover for more money to come in, and for exit ecosystems to be built even more, so that global players can pick up and our companies and help them grow faster.
Thank you, Padmaja. An enabling system is what she asks for. The other two entrepreneurs seek ease of compliances, lower GST rates, and ease of exits other than ESOPs. It's been wonderful talking to you, and despite the fact that you are out there on the front lines, you still managed to seek something from the government. Let's see what Nirmala Sitharaman has to do about that. Thank you very much for being here.
Thank you.
Thank you. Thank you.